It can be exciting to consider earning some extra money in retirement, whether it is for pleasure, to stay active, or to supplement your income. But how exactly do these additional earnings impact your financial picture, especially when it comes to taxes? When you earn part-time wages in retirement, they are generally taxed in the same way as any other employment income. This means your earnings are subject to federal income tax and often state income tax, just like they were during your working career. You will also pay Social Security and Medicare taxes, which are collectively known as FICA taxes. The reason these wages are taxed is straightforward. The tax system generally does not distinguish between wages earned before or during retirement. It simply views them as taxable income. Your part-time earnings are added to any other income you receive, such as pensions, Social Security benefits, or withdrawals from traditional individual retirement accounts and for 401(k) plans. This combined income determines your overall tax bracket. For example, if your wages push your total taxable income into a higher bracket, then all income within that higher bracket, including some of your part-time pay, will be taxed at that higher marginal rate. Furthermore, the FICA taxes, consisting of 6.2% for Social Security and 1.45% for Medicare, are applied to your wages up to certain limits for Social Security and on all wages for Medicare, regardless of your. To manage your tax situation effectively, there are a few practical steps you can take. First, keep meticulous records of all your part-time income and any related business expenses if you are self-employed. If you are an employee, review your W-4 form with your employer to ensure the correct amount of tax is withheld from your paycheck. If you are self-employed, or if not enough tax is withheld, you might need to pay estimated taxes quarterly to the Internal Revenue Service to avoid underpayment penalties. Understanding these details can make a real difference. For instance, if you claim Social Security benefits before your full retirement age and your part-time earnings exceed a certain limit, a portion of your Social Security benefits might be temporarily withheld. This does not mean your wages are taxed more, but it is an important consideration for your overall cash flow. Also, if your adjusted gross income crosses specific thresholds, you might face an income-related monthly adjustment amount, or IRMAA, which means paying higher premiums for Medicare Part B and Part D. These are the kinds of financial considerations that highlight the importance of planning. By understanding how your part-time wages are taxed in retirement and how they interact with other income sources, you empower yourself to make informed decisions. This knowledge allows you to better estimate your after-tax income, plan your spending, and potentially adjust your work hours or income strategies to align with your financial goals. It is all about maximizing your financial security and enjoying your retirement with confidence.